Hi, it's Joe Mazumdar of Exploration Insights at the Metals Investment Forum, March 2022 edition. I'm sorry I can't attend right now, and presenting virtually as I'm currently on a site visit in Argentina, visiting some projects there in the Andes. So it's nice that we can go out on site visits again. I was just recently at one in Spain a couple of weeks ago. The COVID-19 anxieties are sort of coming behind us, and we're right into the anxieties about inflation and higher interest rates. And now all of a sudden we're also got to deal with the invasion of Ukraine by Russia. So with all that happening, let's dig into a topic that I want to highlight here is about the copper market and why we shouldn't forget about it, and the potential for risks with respect to a supply shortfall that we're projecting in 2025, 2026, which might happen quicker. Okay, so here's a graphic that's indexed back to the end of 2019, between base metals such as copper, lead, and zinc. So as we can see, like copper is up about 65% over that time, and it was up 70% earlier as it pulled away from other base metals. So during that time we had a plunge due to COVID-19, China coming back online, growing demand again, and then production disruptions in Latin America due to COVID, which helped spike copper. But now the recent increase in an outperformance of nickel are basically driven by the recent events in the Ukraine. So speaking about that, this is a graphic showing basically the commodities that are at most at risk with sanctions against Russia. And in terms of base metals, the one that's at most risk is nickel. And where that's coming from is the Norilsk nickel operation in Siberia. That also produces a bit of copper, but its biggest exposure, non-base metal, is basically palladium. Okay. So if we look at the LME price of copper on the left, the orange line, versus the visible inventories, we could see that copper price sunk to a low over the last, let's say this is back to February 2019, when the London Metal Exchange and the Shanghai Foreign Exchange inventories peaked at over 610,000 tons of copper cathode in inventories. But since then, we've had a steady rise in the copper prices. At its lowest level, at about 110,000 tons in the visible inventories, copper was up to $4.34. The copper price increase, the rate of increase has slowed, but interestingly now we've had a doubling of the copper inventories recently over the last few weeks to 232,000 tons, but copper has stayed at about $4.50 per pound. So that's really bullish for copper sentiment. So as we can see in 2022, and this is the commodities and the assets classes that I follow for my subscribers on a weekly basis, we can see the biggest increase has been the volatility, and the volatility has been based less on COVID and more on the potential for higher interest rates that had a negative impact on the US stock market. But now it's being driven a lot by rising oil prices driven by the Russian invasion of Ukraine. The commodities being sanctions have done well, crude oil, natural gas, palladium, and nickel. To date, even though copper is still trading at about 90 to 92% of its 52-week high, it hasn't outperformed these other commodities. And here's the real point in terms of why I'm bullish on the copper market, and it's more about the supply restrictions. So if we go by this slide, in terms of Wood Mackenzie forecast for copper production, and the dark blue is copper production from base case mines that are currently operating. And then what we see is these brownfield expansions, projects that are building up, like, Cerro Verde expansion or something like that. And then the gap of the supply gap that's forecast to start growing in 2026. But right now, if we want to fill that gap, given the permitting timeline in most countries, I mean, it's easily over a decade in the States, is that if we don't know about that project right now, and it doesn't have a resource, that project's not going to fill that gap. So, and the other risks that we have now is, changes in the Peruvian and also in the Chilean governments, and these are two of the largest exporters of copper into the market. If they constrain production through limiting water, making it more difficult to build projects, we might see some of these brownfield expansion projects being at risk. So, and that's been, underlined and highlighted by Richard Ackerson, CEO of Freeport, McMoran. So, copper supply basically to meet this growing demand, partly in a clean energy transition, it's getting harder as local groups are more against these mines, and then the rents are going up. Like Chile wants to increase royalties and taxes, then I highlight that in Panama, Cobre Panama, First Quantum Minerals was forced to pay a higher royalty, about $375 million per year, which they gladly paid because this project, obviously, as you can see from the photograph, the open pit's built, and they want to take advantage of the copper price. And then in the US, a so-called low-risk geopolitical risk jurisdiction, Antofagasta is basically, wants US officials to reconsider a 20-year ban on mining in the boundary waters in Minnesota that basically blocks its Twin Metals copper and nickel project there. So another one in the States, and this one's in Arizona, and we could take it back a bit. When I worked for Phelps Dodge, we had the Safford mine, a solvent extraction electrowinning project there that took at least 7 years to permit. And the Resolution copper mine, when I worked as an analyst in the early 2000s for Phelps Dodge, we had that coming into production in 2010. It is now 2022. About $2 billion has been spent by the partners, Rio Tinto and BHP Billiton, two large, major diversified miners. It's a big project, a potential block cave that could generate, when at peak production, 25% of copper demand in the US. But a land swap that was approved by the previous administration in the US has been reversed, and the environmental impact statement was rescinded for review. So this one's still in suspended animation. So if we look at the exploration side, we could see, like, from 2007 and 2021, this is copper exploration expenditures in millions of US dollars by geography. And so over this time period, on average, about 40% of exploration has been dedicated to Latin America. And why? Because you've got countries like Chile and Peru that are big copper producers. Canada, the US, and Australia typically see about 30% of these exploration dollars. And importantly for people looking at copper, from 2020 to 2021, global copper expenditures were up 30%, but just getting back to the levels that they saw in 2019. So if we look just at 2021 and the budgets for exploration in distinctive countries, we could see, again, when I said previously that, on average from that 2007 to 2021 period, USA, Australia, Canada, considered low-risk geopolitical risk jurisdictions, saw about 25 to 30% of the budget, global annual budget directed at copper exploration. Last year, or in 2021, they saw 35 to 40%. So more, like 855 million of the $2.3 billion spent. The biggest increase, the 2021 increase, was actually in Canada. But interestingly, in terms of production, the top 5 copper mines in Canada, which includes Highland Valley, what Vale does in Northern Ontario, Glencore, what Newcrest is mining at Red Chris, and Taseko's Gibraltar, that only generates about 1.5% of global production. So here you got a country spending about $200 million a year, more than what's being spent in Peru, which was at one point the largest importer of copper into China. More money is actually being spent in Canada. And I would say that, because we have more juniors here, because they can raise money to explore in Canada, you got flow through financing, and you could see that same impact in Australia with the number of companies, as you could see the dots here representing the number of companies operating. When you have less juniors, you don't see these kind of numbers. In Canada, Australia do have a lot of juniors operating in those countries, and they can raise money to explore in these countries. But in terms of allocation of resources in the ground, there's more in Latin America than some of these other countries that are seeing a lot of funding. So if we look at this, is ranked basically from left to right based on the same amount of exploration expenditures being spent in these countries. So it's not ranked by geopolitical risk, it's ranked by what's getting spent. So if we look at this, the first 4 countries are considered low risk geopolitical risk, politically, operationally, by security and terrorism. Okay, and basically the cumulative score is given. And so you can see US, Australia, and Canada are ranked, in terms of geopolitical risk very well. And so at this point was Chile. Chile, the geopolitical risk has gone way up because of now their left-wing government that wants to increase taxes and royalties, restrict water on operating mines, and potentially make it harder to develop new projects. And then I would say in the US, the issue is that permitting is taking a long time, and with the new administration, they're starting to rescind permits, like what I just showed you with slowing development and resolution, the Antofagasta project in Minnesota, and what I will go into a little bit more detail later with the Trilogy South 32 joint venture with the road, Ambler Access Road. So, and the other issue is that, geopolitically, Australia and Canada, you can permit there, you can work there, that's fine. But in terms of endowment, they don't have the kind of endowment that the Peru has, that Chile has, that, even Ecuador and Argentina have. And also, given the issues with Russia going into Ukraine and the sanctions, the amount of money being spent by foreign companies exploring in Russia will go down quite a bit. What I do see potential for, because of the permitting risk in countries like the US and the issues that are happening in Chile and Peru, some of that money is moving to Ecuador and Argentina, but also maybe we'll see more money going to Africa. Most of the exploration expenditures that are going in there right now are driven by Ivanhoe, but we can see more in Zambia and potentially in Botswana going forward. Okay, in terms of company spending exploration money, Rio Tinto blows everybody away. Okay, the majors spend the most in terms of exploration expenditures. They spend 60% of that $2.3 billion budget. And Rio Tinto by itself accounts for the majority of the budget controlled by majors, about a quarter. 25% of that money is 25% of the 60% that's spent by majors is Rio Tinto by itself. And what's interesting in terms of the grassroots component is huge. So half of its budget, like over, almost 200 million, 193 million, I believe the number is spent on grassroots, which is amazing. The average spent of these companies is about a third. And so they're spending 50%, whereas most companies are spending 30 to 35%. Their grassroots exploration budget is more than the top 5 largest grassroots spenders combined, just that one company. So they're obviously super keen on copper. So if we look at it from raising money, financings from January to November by mining companies, for gold, base metals, and specialty commodities by intermediate and junior companies, we saw an 86% spike in financings. And people could probably relate to that last year in terms of the number of financings we saw. Granted, the biggest spike was in specialty commodities, lithium, and others. But we can see that, there has been a consistent growth, not only in gold, but in base metals. So we saw a big jump in 2020 versus 2019 of 129%. And we saw another jump of 33% just for base metals. So now the amount of money that's been raised for gold is about parallel now to the funds directed to base metals, which is encouraging for people looking at base metals. So if we look at M&A, and this is just for copper and nickel, I think I showed this slide in the last one, but I'm just going to delve into this one more time, that we're talking copper market M&A transactions of about $4.8 billion, accumulate about over $30 billion of copper on the global resource standard, and paid about 15 cents per pound. The largest transactions, and that's been the trend, and we see that in the gold market as well, that was for operating assets. So no permitting risks, no capital risk, willing to pay the premium up. So the majors were buying, and the intermediates and the sellers were private equity. Like Appian thought that they sold Santa Rita and the other nickel asset in Brazil to Sibanye, but Sibanye withdrew, and now there's a bit of a lawsuit going on about those two projects. And then also the smelters, like the Korean firms and the Japanese firms selling assets, like the project of Sierra Gorda, bought by South 32 in Chile, was a Japanese firm selling that. Matsa was private equity out of the Middle East, and I believe a Japanese smelter that sold that complex in the Iberian pyrite belt to Sandfire, and that was the biggest transaction that I logged. So again, large operating complexes purchased by intermediate companies like Sandfire and major companies like South 32. Okay, so now we say, well, okay, here's the market backdrop. Copper, exploration's rising. There's a risk of a shortfall in supply. There's M&A activity growing. There's heightened geopolitical risk with respect to constraining some of the ability of this production to come online. So how do we play it? And so, in terms of the Lassonde curve, you can stay on the exploration side, on the left-hand side here. You could look at development plays. And as I've said, there's not a lot of development plays out here that can be permitted. Or you could go straight into production, liquid, cash flowing, and just look for leverage. Okay, so we'll start on the exploration side. So talking about that site visit that I made a couple of weeks ago to Spain after getting tested for COVID 5 times and having 2 planes being canceled, one doing weather and one because pilots went to the wrong airport. I went to go see the Iberian Pyrite Belt, hosted by Pan Global Resources CEO Tim Moody. And Tim Moody has a lot of experience in this belt, a lot of experience with big companies, and he worked in the area after Las Cruces was discovered by Rio Tinto, which is on the eastern extent of the Iberian Pyrite Belt as it plunges undercover. I mean, this project was at Las Cruces, had a chalcocite blanket that was grading about 8 to 9%. That more than paid for its, 20 to 1 strip. Now that project, First Quantum, they're going underground, but in the meantime, they're treating the tailings, which has about 1% copper in it. Interesting. So the Iberian pyrite belt hosts probably one of the largest accumulations of sulfides. I'm talking about pyrite, chalcopyrite, sphalerite, what have you, in 80 known deposits. And so when we were driving from west to east, from Lisbon out to Seville, we would hit a deposit almost every hour. Again, Sandfire, the Matsa project, the Minas de Aguas Tenidas SA, that was Matsa, was purchased by Sandfire for about 1.86 billion. So that was one of the large STEM&A transactions for base metal operations, which sort of signifies or highlights that the Iberian Pyrite Belt is a premier jurisdiction for copper projects, and that's where Pan Global is. I believe Pan Global is presenting this week at the Precious Metal Summit, so I go to their booth and talk to Tim, because I think that's a project worth looking at. And in my site visit, you could see on the upper right here is the Escacena project, which is just west of Asna Collar, which is operated by Grupo Mexico. That's the open pit right there. Their property is only 2 kilometers for them. And the brown blobs here just basically highlight gravity anomalies. And gravity anomalies basically distinguish the high specific gravity of the sulfide zones. And these are very dense, and they have worked out very well for discovering these pyrite belt deposits, including Las Cruces, Neves Corvo, and also one of the new deposits, I believe, at Neves Corvo. Gravity has worked very well. And so gravity is what they've been using at their project, Romana, which is the drilling down to the left here. But there's more targets to test, and that's what got me, was this is a very target-rich environment. And now they're doing airborne electromagnetics, which helps, because then you can look for the massive sulfides that are associated with gravity bodies to basically discover new copper deposits. And so here on the upper right, you can see the footprint of the Neves Corvo mine camp, and the gravity anomalies 5 by 3.3 kilometers versus what they've got at the Escacena project at the same scale, that 2 kilometers and that 2 kilometers. Low impact diamond drilling on tracks, as they're going through a lot of farmland here. Access to farmland is important. Water is also important. There's a bit of a drought there, so access to water for the drilling right now is important. And you can see the reclamation that they do. Most of the reclamation that I had to look for the drill hole collar, because I can't even see it. Because this was a recent one that they're still reclaiming. And so here you can see some shots of core. This is chalcocite. It's actually dark. It was just the way it reflected with my flash, but that's supergene chalcocite enrichment in places. They also get tin, which doesn't happen everywhere in the copper belt. It basically happens at, I believe, Neves Corvo, and it's happening here, but in spots. Most of the mineralization, the hypogene mineralization, is chalcopyrite. And then when you get to the footwall pyrite zone, you're basically out of it. Okay, another one to consider is grassroots exploration, and one that I hold is Hannan Metals. So Peru has a lot of geopolitical risk, obviously, right now, but still Peru, in terms of copper endowment, is amazing. So this is a $20 million Canadian market cap company that's got a joint venture with JOGMEC, the Japanese firm, to look for sediment-hosted copper deposits. So up there with porphyry coppers, sediment-hosted copper deposits are basically the next biggest source of copper globally. And so that belt of potential sediment-hosted copper goes all the way from Colombia, and I believe that's Max Resources over here, down through Ecuador here, which would be, I believe that's Aurelian, that have this, and then Hannan has this basin over here. So what's happening here is that you have these basins that are opening up. You get sediments that are deposited in them. You get brines that fill it up. As they evaporate, you get high saline solutions. As these deposits are basically buried, these brines are heated up. That those waters or those fluids start circulating, they leach copper and silver into chloride complexes. They go up some of these fault boundaries, and then they deposit at favorable horizons that basically provide chemical sinks for these copper and silver mineralization. And that's where you want to look. And then post that, you have folding, more faulting, and then you end up with something here in the middle. And these red lines basically delineate these zones of up to 2 meters or more of up to 2% copper. And now you're in the jungle, and you have to look for it there. And what they've done is LiDAR to basically find outcrops. And now they're generating drill targets that they want to test this year. But what's interesting is here you're dealing with a company with a market cap of about 20 million with a top 10 land package in Peru. So this is Rio. Rio, multi-billion-dollar diversified miner, has about the same land package as Hannon. Okay, and so this is what you're looking at. So through the jungle, this is what they're finding. These outcrops about 2 meters, 1.1% copper, 11 grams, some places 2.8 meters of 3% copper. And that's what it looks like on the right. And the trenching that they've done last year to generate the drill targets, I averaged it out at about over 2% copper grades. And just about 30 grams per ton silver on average. So the next big thing for them is to generate drill targets, which they're doing, and hopefully get drilling in 2022. Another one, a micro cap here that's in Zambia in the Central African Copper Belt. This is Midnight Sun Mining. I own this one as well. And this one, you can see how many projects here that are copper projects through the Zambian belt. And here you are going into the DRC, and there's Kamoa up here, Kakula there. You've got Tenki Fungarumi up there. So, just a lot of copper projects here. And they're all related to these domes. So on the edge of the domes is where you tend to find the copper deposits. And one of the biggest deposits out there in this region is Kansanshi, which is owned and operated by First Quantum. And if you look in your right, there's the Kansanshi mine complex that's operated by First Quantum. The land that's to the southwest is all held by Midnight Sun. When Rio Tinto did a major aeromag survey through that entire district, they basically picked up all that ground around it that was available. And what was left was the Midnight Sun ground. So they've done a joint venture and earn-in with this microcap company. And so that's one that I own with Rio Tinto funding it, them doing the exploration. But the problem is that Rio Tinto does it on their time. And so the news flow can be slow, but funding is not a risk here. And again, if it's not big enough for Rio Tinto, we have a major operation here, a mine smelter owned by First Quantum that could easily make a smaller deposit, make it worth their while. So here you could see the agreement with Rio Tinto. They finished the initial cash payment of 700,000, and the initial work program, they did that really quickly, which was a $3 million work program. And now they're at stage one where they're earning 51% by spending 16 million over the next 4 years and paying a Midnight Sun about $1 million. And so this is what the ore looks like at Kansanshi, which is the upper right, that big, huge complex, which hosts a global resource of over 14 billion pounds of copper and over 10 billion pounds of reserves, grading about 0.6% copper. So Midnight Sun microcap, joint venture with a major, great belt, Central African Copper Belt, right beside infrastructure with respect to Kansanshi and First Quantum. So if we get out of exploration and you're looking for more liquidity, but potentially development risk, then you're looking at companies here. And the one that I've got here is the one that presented last metals investment form, which would be Trilogy Metals, and that one had a big plunge in value, about 30%, when the road that was permitted, and they recorded a positive record of decision here, the BLM did, Bureau of Land Management, back in July 2020, which basically allowed ADA, which is an Alaska Development Corporation, to build this 211-mile road from the Dalton Highway, which opens up access to the Ambler mining belt, which hosts about 9 billion pounds of copper globally, 3.5 billion pounds of zinc, 0.7 million ounces of gold, and about 58 million ounces of silver, which is in a 50-50 partnership with South 32, which is a major diversified miner based in Australia. Also, the partners have an agreement with the local native core here, which is NANA. The problem is these villages with, I don't know, hundreds of people that are worried about subsistence hunting. And so basically they delayed the permit by 60 days and 30 days. And when that expired, they basically suspended the permit so they could discuss the impacts on these two small villages to prevent potentially a multi-billion-dollar project from actually happening. The right-of-way exists. So here's a bunch of national parks, gates of the Arctic National Park, that this road basically goes right through, because the road permission was given before this park existed. Again, strong support by the Native Corp, which is NANA, which is also linked to another deposit up there that's currently operating, that slips my mind right now, big zinc one that Teck owns. So they understand the benefits of mining here. The problem is these guys don't get a lot of benefits, or are just worried about the road and public access. So there's got to be more discussion with them. I'm still bullish that this will actually come back. But right now, that's where we're at right now with South 32 and Trilogy Metals. The road permitting right now and suspension of it has made the project take a step back, but there's strong partnership that are going to keep this project at the forefront and going. So in terms of permitted growth, and if you're looking for that lower risk, high liquidity, I picked up Arrow Copper as it was falling because of a revised 5-year guidance to grow their production, double it. So they hit very nice intersections of about 7 meters of 9% copper at their Pilar mine, and 70 meters of 3.55%. And so high grade, permitted, looking to double their growth in Brazil. Great management team, a lot of insider ownership. And so you can see the plan is to basically grow the copper production here from 45,000 tons to 90,000 tons and maintain a low copper cost of around $1. But the change in capital expenditures basically is what put their share price down. But now they put in a 5-year bond to basically handle that. But also at a $4.50 copper price, they believe their internally generated free cash flow could fund the entire program. Okay. So just to sum up, although the copper price appears to have stalled as nickel has taken the forefront due to Russian sanctions, don't forget about copper. There's a paucity of development projects out there to fill that medium to long-term supply. The shortfall could come sooner as some of these projects don't get permitted, your Resolution, your Arctic, and the changes of tax regimes and permitting and water in Chile and Peru. Copper exploration's up 2021, up 30%, still dominantly Latin America at 40%, but there seems to be a transition from Chile and Peru to Ecuador and Argentina. US, Canada, Australia is up in terms of 25 to 30%. Now they're seeing a higher proportion going to those jurisdictions, but the geopolitical risk of actually permitting in the USA, defies the logic that it is low risk, especially if you're not in Nevada. So although Canada saw a significant increase in copper exploration expenditures and budgets directed there, they to just under 10% of global expenditures, the top 5 mining companies generate only 1.5% of global copper production. So is the endowment there is really my question. Okay, so the capital to access to capital drives the higher number of companies both in Canada and Australia. M&A focus has been on operating assets that I show you with Matsa and the Iberian Pyrite Belt, Sierra Gorda in Chile by South 32, but I think now we'll see things going more upstream. Okay, well, thank you very much for listening. Hopefully that was helpful. And that's it for me, Joe Mazumdar, Exploration Insights at the March 2022 Metals Investor Forum. Thank you very much for listening.